All right. Welcome, guys, to Ostibina YouTube channel. My name is Ostibina. I'm a forex trader, a crypto trader, and a networker, right? So, on my channel, I make videos on how to make money online, how to trade forex professionally, how to trade crypto as well, right? So, if you want to learn all this, so make sure you subscribe to our channel and leave a like button for us, and then don't forget to turn on notifications so you get notified whenever I upload new videos, guys. So this video, it's just like call it an all-in-one video, right? So I've been making series of videos, but then I'm going to bring everything in together to explain what forex is, how to trade forex, and then we are going to go and do a live samples, right? I'll teach you how to execute orders and everything actually you need to know about forex. I'm going to teach you on forex, and then all the things I'm not going to teach you is technical analysis and fundamental analysis, right? Because if covering that, we're not going to cover that on this very video, right? We're going to cover that on other videos. So on this video, we're going to cover the basics, right? And then basically how to trade, right? How to your risk management, and then how to place your orders, right? How to place your orders so that you know when you get signals. After watching this video, you will now understand what forex truly is, and then when you get signal, you will be able to know how to go through, because it's not just about getting signal, it's about knowing how to take the signals, when to leave the market at the appropriate time, right? So that's it. So um for me, I believe if truly you intend to go into forex, right, you intend to start trading forex, it therefore means that you need to understand what forex truly is, right? So I've seen so many people trading forex, yet they don't know what forex is, right? So I'm going to explain in depth, right, so you get to understand what forex truly is, right, on this video, right? So first, we are starting with what is forex. We have so many things we are going to cover, but then we are starting with what is forex. So Forex is actually a short form, as the word as you can see the word there, for and ox, right? So this for is actually for foreign, and then this ex is actually for exchange, right? So foreign exchange. Hearing the word foreign exchange, that brings in different current countries, right? So it means that different countries, right? Foreign exchange. So that it therefore means an exchange. Is the exchange of different countries' currencies. That's basically what forex is, right? So that's it, right? So forex actually is an OTC market, right? Which is OTC. OTC is simply over the counter market, right? So that's it. And because of that, it means that there is no central exchange to buy currency. There is no central exchange to buy currencies. So that's it. And because it's an OTC market, the price at which it is being bought and sold, they vary, right? So you need to understand that. So that's it, guys. So in forex market, there's what they call interbank market, right? Interbank market. Now, what is interbank market? Interbank market is where banks exchange currencies with one another. So that is it. That is it. Since it has to do with exchange of different countries' currency, that it therefore means that banks or different institutions or individuals have to come together and do this exchange, right? So that's actually what that's about. So and then there are levels to these things, right? But then we have three levels, right, of trading in forex. Now, after this, after my explanation, you know the level at which you are, you know the level where we including you and I, where we are, right? So we have the first level, which is FX dealer. We have the second level, other large participants, and then we have the third level, forex brokers and retail ECNs, right? We are going to talk more about that on when we get to forex brokers, right? So that is it, guys. So very quickly, let's move on to the next point, which is forex broker. So we need to understand what forex broker is, and then we'll be able to decide which broker to use, because we actually need to know the broker we are going to use in order for we not to lose our money to scammers, right? And then not just losing our money to scammers, losing our money to brokers that are manipulative, losing our money to brokers that their spreads are high and so many things, right? So that's it, guys. So after watching this video, you get to understand which forex broker to choose, right? And I also recommend the forex broker you should go with, right? So now let's talk about forex broker, right? Now let's talk about forex broker. What's a forex broker? So many people they have been talking about for a broker. Yeah, they actually don't know what a broker is, right? So actually, a broker is an entity that facilitates the execution of your orders. So when you place your order, it helps you to facilitate it, right? It helps you to take it out up there through the exchange, which is the first the execution level, right? So where it's going to be executed, right? You know, forex is actually an interbank system, right? Interbank market, so it goes through levels. So I'll go to expatiate more on that as we proceed, guys. So now, let's talk about what you need, in a forex broker, what you should be watching out for, right, in a forex broker. Now, first of all, this forex broker should be regulated. Secondly, this forex broker, there should be transparency, right? So alignment of interest, you need that. And then we have low fees. Dis forex broker, their fees should be low. Den they should offer good leverage, good platform, and den they should have good support so dat wen you contact their customers care, they will be able to respond to you promptly. Now let's dive deeper into forex broker. We have different types of forex broker. We actually have two types of forex broker. We have the A book broker, and we have the big book broker. So I believe you guys are following, right? So we have the A book broker and we have the B book broker. So let's talk about A book broker. The A book broker is actually the A book broker is the order book that has the major liquidity providers, right? So the major liquidity providers, when a broker is using this book, right, he is sending your orders. You need to understand this. They are sending your orders to be executed with one of those liquidity providers. That is, this is the order book used by ECN broker. So this book broker, this a book broker, dey send your orders, right, to be executed to those big liquidity providers. So and this a book broker, they are the ECN brokers, right? They are the ECN brokers. So we have the second one, which is the B book broker. This is actually an in-house, right, order book. This book, big book, is actually an in-house order book. So let's actually expatiate or talk more about what that this in-house order book, what it means. So it's when a broker is using this order book, he is taking the order side, right, of your position, right? So that's it. So let's say you are taking a buy trade, the broker is actually taking the other side of it. They are trading against you. So and in such case, you know that they have their interest at heart. They don't have your interest at heart. They want to make money. That's what they are there for, right? So you should actually stay away from such broker, which is the B book broker, right? So that's it. That's it. So I'm actually going to tell you some of name some ECM broker for that you should use. I will name just two. So recommended IC Market is an ECM broker, and IC Market, I have used it personally. IC Market is great. Owanda is also great, right? So you should go out there and get Owanda, right? Register with any of them. However, I can also recommend something like, it's actually a Nigeria broker which I'm currently using. Um, though my phone, much of my phones are not there, and then they're actually lagging in some areas, but then I'm still using them, right? I'm still using them because simply because their means of withdrawal and everything is quite easy, but then stressful because sometimes you might not get paid on time, but then they will still pay you. That's just it, right? And then the reason why I'm using it, it's actually a great broker. Their spreads are quite low, so you can also. I'm going to drop the link on the description below, which is the broker I'm talking about. So go to the description below. You're going to get the link, right? So, very quickly, let's move to our second subject, which is why forex is the giant of all financial market. The reason why forex is already the giant is because of in the financial market is simply because of the trading volume. The trading volume of forex is higher. Is a the trade it's about $6.6 trillion is being traded every day, which is the volume, right? Compared to other financial market, which is the London Stock Exchange. London Stock Exchange, it actually has about 7.2 billion dollar that is traded every day, right? And then if you look at the Tokyo Stock Exchange, which has about $18.9 billion, which is traded every day. And then we have the New York Stock Exchange, right? Excuse me, please. All right, we have the New York Stock Exchange, which the trading volume every day is about 22.4 billion dollar is being traded every day. Compared to Forex is 6.6 trillion, not even billion, right? So Forex is actually the giant of all, right? So that's why you should come and start trading Forex. There is enough money in the market, right? So you should start trading Forex. So we are going to talk about the reasons why you should start trading Forex. Let me just give you some reasons, 4 reasons why you should start trading Forex. First of all, the trading hours. It's Forex market is open 247. So that's one. And then secondly, we have the leverage, right? So they give you leverage, the ability to buy even above what you have, which is your own money. They borrow you money to trade, right? Let's use it in that's a layman language, right? So we have the theory transactions, right? The transaction cost is less. You don't have to spend much to be able to buy and sell, right? So instead of going to Onitsha, you pay transportation to go to Onitsha to go and buy some goods. But then forex is not like that. You stay in your house with your phone, you'll be able to buy whatever currency you want to buy, right? So that's it, guys. So then the fourth one I said I'm going to name just for, we have ease of access, right? You can stay in your house and be able to trade forex, right? So that's it. Remember when we started this video, we said it's an interbank market, right? So that's it, guys. That is so. Let's quickly talk about currency pair structure. So currency pair, you need to understand that forex is the way forex is being traded. Um, you cannot trade just a particular pair, let's say naira currency or USD. Let's use the USD. You cannot just trade USD alone. You have to exchange USD with other currency, other countries' currency. Let's say now you want to travel from Nigeria to, okay, let me use the word let me use let's say, okay, Britain, right? You want to travel from Britain to uh, Canada, right? So what you need to do, you have to exchange their Britain, their pound, right? The Britain they actually use pound. You have to exchange pound for what? Canadian dollar, right? Canadian dollar. You have to exchange it in order for you to be able to spend money in the country where you are going to, and that's where forex comes in, right? So that's it, guys. So it involves um it actually involves two different countries' currency. That's why it's called currency pairs. Currency pairs, it involves two different countries' currency, right? Like I have explained earlier with that our example, right? So that's it. So let's say, like I said on the sorry, like I said previously, you are traveling from where? Uh, Britain, right? Britain, their short code is called, these are, they actually, let me write it first. GBP USD. Sorry, not USD, card. Because we are traveling from where? We are traveling from, all right, let me, hold on, please. All right, we are traveling from Britain to Canada, right? So we have to exchange our pound, British pound for our Canadian dollar, which is the dollar, Canadian dollar, right? In order for we to have money to be able to spend in Canada where we are traveling to, right? So that's basically what it is, right? But now you need to understand that it's you will not just come and write pound and dollar or so, yeah. This currency, every currency, they are represented by by ISO code, right? ISO code, right? ISO code, right? Which is first, you have the first, which is, they are all of them, they are actually three letters, right? So the first one, the first two is represented like the country name is what is written there. The first two, it represents the country name. The third one, which is the last one, is like in the case of GBP. This first two is actually Great Britain, and then this P, it represents their currency. Great Britain pound. Great Britain, they use pound, right, as their currency. While in the case of card, Canada, right? CA is actually Canada. Is a country's name, right? And then the D you are seeing right there, it represents dollar. So I don't want to go much into that because of our time, right? So if you want to get to know more about this, I think I've made videos previously on currency pair structure. So you can go watch the video so you get to know what it is, right? So that's it, guys. So having understood that, okay, currencies are being traded this way, right? You need to understand, okay, now this is not, you don't just, this this first one, which is GBP, is called the, in this case, the first one, let me differentiate them so you get to know that they're actually different currencies, yeah. Alright, so the first one, which is GBP, in this case, anywhere you see any currency pair and you see the first one is always the base currency. The second one is actually the quote currency. So I will not go details into that because I already explained that on my previous video. So if you want to go get to know more about it, go to my previous video. I made a video on that. So the first one that you are seeing right here is called the base currency, while the second one is called the quote currency. The reason why you need to understand is actually, let's say you have a news event is coming, or someone tells you that, okay, GBP is going to buy this week, right? So you don't just, you have to go to your chart or look for currencies that has, you have to go and buy currencies that have GBP as the base currency, and then you go and sell currencies that have GBP as the quote currencies. That's how it works, right? So that's why you really need to understand currency pair structure. So now, very quickly, guys, let's get into what lot size is. So let's talk about lot size. All right, lot size. It's this is actually not difficult, but before we go into lot size, I would love you guys to. I would like to tell you guys, the major currency pairs. So you get to know the major currency pairs that you should be watching out for. So I'll just name them. So if you have your Bible right there, you can write them down. So the first one is the major currency pairs. The first one is Euro USD, right? And then the second one is GBP USD. And then the third one is USD JPY. The fourth one is USD CHF. The fifth one is USD CAD. The sixth one is, if I'm not mistaken, AUD USD. The seventh one is NZD USD. I think they are eight in number. They're actually eight in numbers, right? So they're actually eight in number, right? So that's it. So what makes a current, ask yourself this question, what made all these currencies different from other? What made me to call them the major currency pair? The reason why I'm calling them the major currency pair, any currency where you see dollar, US dollar is the general currency, right? So anywhere you see US dollar as one of the currencies in any pair, it therefore means that that very currency is a major currency, right? So that's just the idea behind it. That's what you need to understand. Any currency pair where you see dollar as one of the currencies, one of the two currencies, it therefore means that that is a major currency. Now we'll talk about cross currency. It's actually a combination of major currencies without USD as one of them, right? We have made, as we have major currency pairs, we also have major currencies. So let me just name the major currencies so you get to know the major currencies. Now the first one is USD, the second one is EUR, the third one is GBP, the fourth one is CHF, the fifth one is CAD, which is Canadian dollar, and the sixth one is NZD, New Zealand dollar. The seventh one is JPY, and then the eighth one is AUD, right, which is Australian dollar, right? So, and then we have what they call exotic currency pair, right? Exotic currency pair, it's actually a combination of one major currency and one emerging market currency, e.g. Euro TRY, right? So that I believe you understand it. So if you don't understand it, let me come again, please. All right. Exotic currency pair, it's a combination of one major currency pair. Note, mark my word please, one major currency pair and one emerging market currency, right? So that's it. That's exotic currency pair. This type of currency pair, you should run away from them. Please don't trade them, right? They are not liquid. There's no much volatility in it. So you need to understand that and then stay away from such, right? So now let's talk about lot size, right? So there are three different lot sizes, so you need to understand that. And then we have a standard lot, which is one. Whenever you see one, when we are talking about lot size, if you see one, it's a standard lot. And then 0.1, and that standard lot is actually like, if you use one standard lot, you're actually buying 100,000 units of the base currency. I already told you guys what base currency is. So if you use one standard lot, you're actually buying 100,000 units of the base currency. So very quickly, let's move to the next one, which is mini lot, which is mini lot is 0.1. And when you use mini lot 0.1, you're actually buying 10,000 units of the base currencies, right? So and then we have the third one, which is micro lot. So micro lot, which is 0.01, we are it's actually you're actually buying 1,000 units of the base currency. You see, it's not very easy to buy it with your own money, because you don't actually have it. Let's say now Euro USD, and you want to use one lot size, and you have, let's say, $1,000, and you want to use one lot size. Even though you have a $10,000 and you want to use one lot size on Euro USD, you know that you have to buy, this is one point something, the price currently is one point something, you have to buy 100,000. Is actually what you are if you use one lot, you actually buy 100,000. This is that it therefore means that you need around $100,000, right? $100,000 plus, so to be able to use one standard lot. So that's where leverage comes in, right? That's where leverage comes in. You see it, guys? That is where leverage. Now, leverage is actually, to me, I'll use the word a buying power. It's a form of a buying power, right? Your broker is actually borrowing you, right, to money to trade with, right? So that's it. Let's say now your broker decides to give you, there are so many brokers. I'm currently using the broker that gives, I'm using 5,000 leverage, right? 5,000 leverage, it simply means that times 5,000 of whatever amount I have, that's the power, the ability they are giving to me. Let's say now, let's come to our calculator. I have $100 account. Let's say I have $100, just $100 account. Let's start from there. $100 account, and I'm using 5,000 leverage, like I said earlier. So I have the ability, $500 times 5,000 leverage. So that's times 5,000 of my money. That's what I have the ability to buy. You can see right here, I have what? I have 500,000, right? It therefore means that I have ability to buy 500,000 worth of the base currency. I can buy, which is I can use. You remember we said initially you need what? When you are using one standard lot, you're actually using what? You're actually buying 100,000 units of the base currency. It therefore means that since we have 5,000, we have $100, and we have 5,000 leverage, I can still buy, I can use even five lot size, which is I'm buying 500,000 units of the base currency. You see how amazing that is? But originally, with my own lot, just my money, I cannot do that. If it's just my $100, I cannot even use 0.01, which is mini lot size, right? Sorry, which is micro lot size. I cannot use it because
To micro lot size, if you want to use micro lot, it simply means you are buying 1,000 units of the base currency. So and this in this case, this is one point something dollar, right? This one point something dollar, it's actually you need 1,000 plus dollar to be able to use 0.1 dollar right here. So to be able to buy 100 pieces of euro, right? So that's it. I think you that is well understood now, right? I think that is well understood. So now, before we continue about leverage, I want to teach you guys how to use your lot size very well, because before you take any signal, guys, you truly need to know how to use your lot, right? How to the lot size you should be using. So this is pay attention now. Pay attention. Pay attention. So the lot size you should be using, how to calculate your lot size. Now this is what you need to do. You have your account. Let's say I have $100 account, and now you ask yourself, how much do I want to risk? That is very important oh. That is very important. You don't just come into this market and then you use any lot size of your choice. No, it does not work that way. If you do it that way, you will lose all your money without even knowing that you are losing everything. So you have to know the exact amount you are willing to risk. In that your $100 account, I have $100 account. How many dollar am I willing to risk? Ask yourself that question. Okay, let's say now I have $100 account. I'm willing to risk ten dollar, right? So the $10 of $100 is actually 10%, right? $10 of $100 here. $10 of $100 is 10% of it, right? So we write 10% here, which is I wrote 10 here because it's 10%, right? Risk in percentage. Now stop loss. Let's say you are giving a signal, and then the stop loss, the person tells you the stop loss is 20 pips, because personally for me I use average of 20 pips for trading. That's my I don't use above 20 pips. I actually use 10 pips to 15 pips, 10 pips 15, but no matter however it must not be more than 20 pips. So let's say I give you signal now. If I'm giving you signal, you should just calculate it based on 20. You should know that your stop loss is no more than 20 pips, right? The stop loss I'm using, even though I don't tell you the stop loss, you should know that the stop loss is no more than 20 pips using my signal, right? So you put 10, 20 here and then calculate it. So what lot size are you going to use in this case? You are going to use 0.05 lot size. Now using 0.05 lot size, guys, the truth is, if this morning, if the trade goes against you, you are only going to lose what? Just $10. If this trade goes against you, you are only going to lose $10 using 0.05. You see why it's good for you to calculate your risk before taking any position. That's it, guys. That's it. You truly need to understand it. You need to know it. So now in my case, I actually do all of these things manually, right? So I'll go back to my calculator. I do it manually. Now I have $10, right? What I will do, I have $10, $100, and I want to risk $10 of out of that $100. So I'll just write $10. That's what I want to risk, divided by the number of pips. We have 20 pips. I told you I use average of 20 pips, but I don't actually use more than 20 pips. I use 10 pips, eight. I even use 8 pips, 5 pips, 6 pips. But normally most of my trades, I use 10 pips actually. But just I calculate my risk in percentage in pips based on 20 pips. So I don't like using random lot size on all my trades. I like using a particular lot size, and as far as I know that okay, this is the risk, my the highest of all my pips in risk in pips. I know it's 20 pips, so I'll just do this. So I'll calculate this. So we have 0 point what? 0 point 5. This 0.5 divided by 10. 10 is the standard. Alright, divided by 10. You can see we have the same answer with that, right? So I actually explained this on my previous video, how to do this better, right? I explained it better on my previous video. So do well to check. I'll just scroll down, you see where I explained lot size, right? About lot size. So we have talked about the leverage issue. So let's talk about the different types of forex analysis. We actually have three different types of forex analysis. technical analysis, the first one. I told you guys I'm not going into that. And we have fundamental analysis, we have sentimental analysis, and we have situational analysis, guys. So these are the types of forex analysis. So do well to learn technical analysis because it's very important. If you truly want to succeed in the forex industry, I advise that you go and learn technical analysis, which is price action, master it and make it part of your life. So that is the truth, right? And then in forex space or in the forex industry, you truly need to know how to read forex fundamentals. Yeah, that's it. You need to know how to read forex fundamental, right? So it's not difficult. So I'll drop the link on my description below. Just visit Forex Factory like this and then sign up with them, and you are going to see this. So this red me here, right here. Actually, I did my filter. So I disabled all these ones. All these ones, they are not really impactful. So this very one you are seeing red is the impact news. So after doing that, I just click apply. So I'm only going to be seeing the news or the economic data that are going to have impact, right? So we have on Wednesday, which is tomorrow, we have CPI on AUD. So these are very impactful. So make sure you check the time. Make sure you check the time before taking any trade. Check the time, right? So check the time is very important. But if you are following me, if you are following my signals, I normally don't trade. I will tell you if there is news. If you join, that's why really you have to join my WhatsApp community. I'll drop the link on the description below. Make sure you join my WhatsApp community because I'm going to be updating you guys all of these things. And I don't take trades. I don't give people random trades except because the strategy I use most times is not 100%, but most times whenever there is news, the news always goes in my favor if I have my analysis done. If there is a setup, my setup is ready at that very moment before the news. My setup is ready. The news will only help me to foster the my trade, right? In just 5 minutes, the trade are supposed to take like 2 3 4 hours. We just in 5 minutes the trade will hit my TP. So that most of the time that's how it is for me, right? So that's it, guys. And then we have talked about different types of analysis. Let me see, we still have about, okay, forex market section. This is very very important as a trader. So you need to know when to trade forex and when not to trade forex. It's very important, oh, very very important, right? So we actually have four market sections of or four major market section, forex market section, four major forex market section. The first one, we have the Sydney section, we have the Tokyo section, we have the London section, we have the New York section, right? So I'm going to be telling you the opening time and then the closing time, and then as for Nigerians here, I also tell you the nine because I'm a Nigerian, so sorry, I'll tell my fellow Nigerians the time that it is in our local time, right? So for Sydney session, the international, which is the Sydney Open, please carry your pen and paper, write it down. Sydney Open, which is the time Sydney session opens. It opens 7 a.m., right? Sorry, 9 p.m. GMT, 9 p.m. GMT, and it closes at 6 a.m. GMT or UTC. Now, for their local time, those in Sydney, right? Their local time is actually 7 a.m. and then 4 p.m. That's when it opens around 7 a.m. and closes at 4 p.m. But for GMT and UTC, it opens 9 p.m. and closes 6 a.m. for GMT. And then for our local time, Nigerians, it opens 10 p.m. and closes 7 a.m. Sydney section. Take note of that. So let's move to the Tokyo section. Tokyo Open, it opens at a.m. GMT. Now in their local time at Tokyo there, it opens 9 a.m., right? Their local time. Now for Nigerians, it opens 1 a.m. Now we have talked about the open and then the close. When does it close? The market. So Tokyo session, it closes at 9 a.m. 9 a.m. GMT, and then for their local time, it closes at 6 p.m. 6 p.m., not GMT, their local time for Tokyo, those in Tokyo. So and then for Nigerians here, it closes at 10 a.m. It opens at 1 a.m. and closes at 10 a.m. I hope you get that right. Now let's come to the London section. Their local time there, it opens at 8 a.m. While for GMT, which is for GMT, it opens at 7 a.m. GMT. Right? For Nigerians here, it's GMT is actually plus one. That's our time. GMT is plus one. So 8 a.m. it opens at 8 a.m. Nigeria or Lagos time, right? And then it closes at 5 p.m. their local time there, which is London. And then for GMT, it closes at 4 p.m. GMT. 4 p.m. GMT. And now for Nigerians here, it closes at 5 p.m. GMT. Now let's quickly move into New York section. Now New York section, it opens at 1 p.m. GMT, and then it closes at 10 p.m. GMT. Now for their local time, those in New York, it opens at 8 a.m. GMT, 8 a.m., sorry, not GMT, 8 a.m., and then it closes at 5 p.m. Then for Nigerians here, and which is Lagos, and then of course GMT plus one, 2 p.m. Lagos time, and then 11 p.m. That's when it closes, right? So we have talked about market section, the opening and the closing. And now let's talk about the market session you should be trading. The market session you should be trading is London and New York session. Is actually the best. Is that they actually the most favorite market section. Sorry, volatile market section. Volatile market section. Please don't misquote me. London section and New York section are the most volatile market section, right? So you should trade during these hours, right? So that's actually when I trade. That's when I trade. I trade at New York and London sections. So you should be trading at New York and London sections. So that's it, guys. I'm not going to go into details. I've actually explained all you need to know basically. So that's it, guys, for now. So guys, if you have any question, please drop it on the comment section. And if this video I tried, this video has helped you, you have learned something from this video, also drop it on the comment section, guys. So let's quickly dive into the practical aspect, because I promised you guys I'm going to also teach you how to navigate to your MT5. So what I want you to do now, go to your Play Store, your App Store, and download MT5, right? And now after downloading MT5, go scroll down to my. I'm going to add the link to the description below. The link of the videos you need to watch, right? To be able to set up, link your broker to your MT5. So I'm going to drop the link of the videos on the description of, of this video. Sorry. I'm going to drop the link on the description of this video. So do well to go to the description. You'll see I'm going to write it down boldly, right? How to connect your MT, how to set up your broker, starting from how to register it, how to set your broker up, how to verify your account, and how to connect your broker to MT5. Everything has been taught. the video, right? So you can actually scroll down and then you will see it is among the list of my videos there. However, I'm going to drop the link on the description so that you get to easily find it, right? So guys, so that's that. So I don't have to start teaching you or tell you guys, okay, this is how to set up your broker anymore, because I've treated that in the past. So now let's talk about which is opening. This is how you can select your stop loss, sorry, your lot size. You have to know the lot size to use. I've taught people what lot size is. So let me just use 0.1. 0.1 is actually meaning lot size, and I'll just click on sell. So my order or my position is open already, and as you can see right here, GBP, this is zero spread. That's why I said this broker, the broker I'm using is quite awesome. You can see currently we have zero spread. Zero spread. The bid and ask price, they are the same thing. This is awesome, right? This is awesome. So that's it, guys. And then you can see I just opened the trade, and you can see right here. So let me just open quite multiple trades since there is no spread, so I'm not paying any commission for it. And as you can see, the market is not moving. Why is the market not moving? Because of the section we are. You can see it was moving very fine all right here, but then you can see right here now it's not moving. It's because of the section, guys. It's because of the section, guys. So that's it. That's it. There's nothing much there. There's nothing much for me to explain again over there. So make sure you watch the videos I'm going to drop on the description below. If not, you won't be able to get everything that I'm teaching you guys, everything on how to set up your account, guys. So thank you very much for watching this video, and thank you very much for staying with me to the very end. Do have a great day, and don't forget to like this video, subscribe, and then drop a comment. Thank you.